Today we will be doing technical analysis on the S&P 500 for the week ending Friday, June 24th, 2022. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. The chart that we will be working off of today is a weekly candlestick chart of the S&P 500 that goes back to the beginning of 2021. So each candlestick on this chart does represent 1 week of trading, and numerous annotations here, and let's just jump right into this. So first off, we had a huge rally this week on the S&P 500, up 6.45%, and we closed at 3911.74. So that's this weekly candle right over here with the arrow above it. And let's also address the bear in the room, right? And the annotation I have right here. So, guys, technically, we have spent 1 week right here, right, a week ago. We have spent 1 week in a technical bear market. Now, remember, a bear market is when you're down more than 20% from your recent high, right? And the recent high, the most all-time high, the all-time high in the S&P 500 was set back on January 4th of this year at 48.1862. That was the intraday high on January 4th. And of course, then we had the reversal, and we've been selling off since. Now, we've had some counter trend rallies, right? We had a counter trend rally here. We had 1 week right here where we rallied. This one, the most recent one, that lasted a week, and it took us right back up to that 4150 area, and then we rolled back over. Well, this week's rally of 6.45% is also a counter trend rally. Could it get us back up to this 4150 or maybe 4200 level before rolling back over? Yes. So guys, it's not likely. It's possible, but it's not likely that we have put in the lows. I did see a video out there from somebody else that I'm calling the bottom. Well, good for him. All right. But it's the technical metrics that I look at based on my proprietary work, we've come close to, hitting some of these metrics that are normally associated with an absolute bottom, but we have not achieved them. Based on my work. Now, I don't have all the answers, guys, but I've been doing this a long, long time, okay? And when you see these types of rallies, it's just, this is not indicative of a bull market move. Anyway, so I just want to prepare you for the reality of the fact that number one, we're only down. Now, look, I am not trying to minimize what we've been through, right? This has not been fun. It's been going on since the beginning of the year, and this is one of the longer downturns that we've had now in well over a decade. But we are not, technically right now, the S&P 500 is not at a bear market. We're in a correction, right? A correction is when you're down at least 10%, but not more than 20% from your all-time high. Again, 48.1862 back on January 4th. So right now at 3911.74 on the S&P 500, we are currently 18.83% below that all-time intraday high. Again, you need a 20% plus drawdown to be in a bear market. So far in this downturn, we have spent 1 week in a bear market, okay? Last week, a week ago. So this week, we had this huge rally. Most of the movement was on Friday alone, where we were up over 3% on the S&P 500. So a huge rally on Friday, but that rally on Friday the 24th brought us back to that 3911.74 number and brought us out of that technical bear market area, all right? So there is some overhead resistance about where we're trading here. If you look over here to the left where my cursor is moving, I don't have any annotations, but you can see there was some trading back in February, March of 2021, around that 3,900 to 3,950 level on the S&P 500. And then we zoomed pretty much right up to this 4,150 to 4,200 level. So really, could we pause right here and roll over next week? Absolutely, we could, right? But it's not unusual to have a summertime rally. And then, August through October, worst 3 months of the year statistically, not every year, but over time. So it would make some sense, right, after this, sell-off that some dip buyers are coming in, algorithms kicking in. We have this summertime rally that's not out of the ordinary, and then we get up somewhere, towards this 4,100 to 4,150 to 4,200 level, maybe even higher, right? Who knows? And then we roll back over and go even lower. All right, that is statistically probably the most likely scenario, but only time will tell, right? Nobody can predict the future, myself included, but nobody else out there in YouTube land or anywhere else can predict the future. The best thing we can do, guys, is stick to the facts, remove the emotions, and use statistical probabilities, technical analysis to give us some guidance as to what we might expect, okay? And that's, anybody that knows me, any of my subscribers, you guys know, right? And I'm talking about not only on the free side, there's well over 10,500 of you on this channel. So thank you for that. And if you're not yet a member, right, if you're not yet a subscriber to this channel, make sure you subscribe for ongoing education. Go back through some of my older videos. Scroll way down and look at the stuff. There's 300 plus videos on the channel, guys. And, go back and spot check some of these things and see if the things that I said didn't happen, all right? I take pride in trying to give you guys the best possible information I can. And obviously, if you're a paid member of the channel or to my emailed newsletter, you guys know that I deliver a tremendous amount of information for a very small amount of money, all right? And the tuition to Wall Street is extremely expensive, and if I can help you, condense time frames, if I can help shorten that learning curve and help you avoid some of the mistakes that I've made over the years, I'm glad to do it. But you have to help me help you by becoming a subscriber to Simple Market Signals. And I'll tee up some more information about that here in just a few seconds. So, again, we are technically not in a bear market. We're on a correction. We're down 18.83%. It would not surprise me to see, maybe a few more weeks of upside here in the markets. Maybe we get back to, somewhere into these overhead resistance areas. We might even, we might not even get this high this next time, but the market will indeed start to run into a thick area of trading that extends clear back to April, May of 2021 once we get back to this 4150 to 4200 level. So, we might get a little higher, right, if the market really has some juice behind this counter trend move. But, guys, the likelihood of this downturn being over based on the ambient environment, based on everything that's going on out there, the likelihood of the bottom, having been put in already is it's possible, but I don't think it's very probable. Are you a business owner or a busy executive, including a doctor, dentist, attorney, or realtor? Do you manage any of your own money, including in your 401k or IRA? Are time and money important to you? If time and money are important to you, then Simple Market Signals should be important to you as well. Simple Market Signals is for business owners, busy corporate executives, and other professionals who want to cut through the stock market BS and get down to the facts. If you value your time, if you value your money, you need Simple Market Signals. Simple Market Signals is based on a proprietary formula developed by a former financial services professional with decades of real-world experience. Simple Market Signals is equity investing information simplified. Simple Market Signals saves you time and helps you understand market trends and risk management in a way few enjoy. Just try it. There's no contracts. You can cancel anytime, and a subscription to this information is less than 67 cents per day. And it's priced way less than it should be for the value it brings. To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. So again, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com.